Would you like to get out of debt and save for retirement all at the same time without having to spend any additional money from your budget? If you just give me 5 minutes, I'm going to share with you three tactics that I go through with each and every one of my clients to help them get out of debt, save for retirement, all the while not having to spend any additional money from their budget. Hey, my name is Chris Talon, and I just help regular people manage their finances, help them get out of debt, and lay a strong foundation for their retirement. And if you would like to receive more information about this, just leave me a comment below after this video, or you can even chat with me in Messenger, and I'd be happy to help you. So again, I'm going to walk you through three tactics that you can use today to get out of debt and to lay a strong foundation for your retirement without having to spend any additional money from your budget. The first tactic is you need financial clarity. And how do you do that? Well, just take a piece of paper and make a list. Make a list of your debts first. All right. List next to each debt what the balance is, the minimum payment, the actual payment that you're making, and your interest rate. It's going to give you a lot of information that you're going to need in order to help you in tactic number two. The next list that you want to make is a list of your assets and investments. List them by type. Give it a name and what type of asset or investment it is. Right next to each, the account value, but also your contribution. If you're making a monthly contribution or an annual contribution, whatever it is, whatever your contribution is that you're consistently making towards that investment or that asset, list it and put it down. The next one is your sources of income. You want to put your monthly income down, your take home of what you're making, or what you pay yourself if you're self-employed, but also any lump sum amounts that you're going to be getting over the course of the year. For example, if you're in sales and you get a bonus and you know what that bonus is going to be, then list that as a lump sum amount. Finally, your life insurance. Most people don't know that life insurance can grow in value over time. And so list all of your life insurance by type, whether it's a term policy or a permanent policy. Um, List your monthly premium that you're paying, your death benefit, but also your cash value as well. So tactic number two is to help you come up and devise a plan for eliminating your debt. And so what we want to do from tactic number one is use that information in order to do some addition, some basic mathematics. So first, add up all your payments that you're making above and beyond the minimum payments for all your debts. So if you have a $75 minimum payment for a credit card, but you're actually paying $150, write down that as 150 and do that for all of your debts first and add that up. It's going to give you a total overpayment amount. Plus, you want to add up all your contributions that you're making on a monthly or a lump sum basis to increase your assets and your investments. And so add up that amount as well and keep that separate from your debt overpayment. So it should be debt overpayment as one category. The next category should be your assets and investments as far as what you're contributing and any lump sum amounts that you have. And finally, you want to add up all of your cash value that is available for your life insurance. And so these are just three different areas that you can use more strategically in order to help you get out of debt. So after having completed tactics one and two, your list should look similar to this one before you. This is just a real life example of a worksheet that I went through with one of my clients, and we're able to find an additional $33,052 that they had allocated somewhere that was totally inefficient to their goal of getting out of debt and saving for retirement. They also were spending $3,119 towards other areas that weren't actually helping them reach their goal. And so these were inefficient funds that we're now using to redirect them in order to help them strategically pay off their debts one by one, but also helping them save for retirement at the same time. So this is the fuel that's going to help them implement tactic number 3. So tactic number 3 is to reallocate your inefficient dollars to fund your family bank. One that's going to help you systematically pay off all your debts, either through a debt snowball or a debt avalanche, but also help you to build a tax-free retirement foundation. It's going to help you provide cash flow to your household for big purchases such as a new car or down payment on a house or property or business. It's going to also provide you with living benefits for terminal illnesses and chronic illnesses. And it's going to also provide you with a way to leave a legacy for others. And so the vehicle in which you use to create your family bank is specially designed high cash value life insurance. And so if you're wanting to pay off your debt and lay a strong foundation for your retirement, effectively erasing years of interest payments and putting that money back to work for you, all the while not having to spend any additional money from your budget, then just leave me a comment below or send me a message in Messenger, and I will personally walk through this system with you and show you how it works and how it applies to your personal situation. Thanks so much and have a great day.